Well, there we have it. The Federal Reserve catalyst is out of the way, and I have to say, some things went as expected, some things did not go as expected here. First of all, we know we are coming off of good earnings for AMD and Microsoft. Fantastic earnings here. And Nvidia is benefiting way more than AMD or Microsoft are benefiting. But what did the Federal Reserve just say? Well, the Fed told us the time has come. Now, that's the time for rate cuts. Now, this is mind-blowing to me that they actually teed this up. They totally teed up the September rate cut. I was not expecting that. I was expecting a neutral to positive or neutral to dovish Fed. We got dovish and positive and teed up rate cut, baby. Now, let's explain how they teed this up because it was pretty remarkable. First, they started with the statement. The statement started off pretty obvious that we were about to have a dovish Fed because they were completely removed the idea that they were going to be highly attentive to inflation risks, and we were really surprised when we saw this. Instead, they moved to this sort of 50-50 aspect where they're attentive to both sides of the dual mandate, which basically implies they're equally balanced between, we're bullish on jobs and bullish on inflation. They've equally balanced this now. Now, of course, they're not going to declare victory, but wow, what did they tell us in the meeting? They told us that inflation has eased substantially. We're attentive to both sides. We've got good growth, 2.6%. Investment in equipment has picked back up. Inflation has eased notably, and we've made considerable progress on inflation. This was mentioned maybe 3 or 4 times. So really trying to show that they wanted to bring this idea that they're so heavily focused on inflation down into balance. And later in the meeting, he even said, we're pretty much balanced now between the two. We're moving closer to where it will be appropriate to reduce policy rates. He went into even more detail later. Rate cuts could be on the table as soon as the next meeting, and we are getting closer to the point of where we can reduce rates. He says if we get a disappointing reading, obviously that could weigh against a September meeting cut. We want more good data. We've seen progress. What I'm basically gathering from this is as long as you have an acceptable jobs report and an acceptable CPI report, they will clearly signal by Jackson Hole, the 3rd week of October, that yes, the rate cut for September is in the bag. The progress is equal now. Keep in mind, when I get through this summary, I'm also going to go through my thoughts on the market and trades and things like that, so we'll cover that. Just want to get through some of what Jay Powell just said. And then, of course, remember, today is coupon expiration day. Questions, email staff@meetkevin.com. Otherwise, get in before the price goes up. You get lifetime access. So even if I'm right yesterday and wrong today or whatever it is, you get me for life in the course member live stream, and you get my ideas and you get my perspectives. So if you like my perspectives, consider checking that out at meetkevin.com. Or if you want something more detailed, go to the meetkevin.com/mastermind. The next group is almost full for October. All right, we last raised rates a year ago in the July meeting. Today, we're in a completely different economy. He says we've made a lot of progress. We've made progress on all 3 forms of inflation, all 3 core forms of inflation, goods, non-housing services, and housing services. We can afford to begin adjusting rates. The upside risk to inflation has decreased. The time is coming at which it is beginning to become appropriate to cut back those restrictions. Headline number on jobs have come down, and the majority supported not moving today. Now, this is really interesting because it somewhat implies that some were for actually cutting today. Or maybe hiking, but I doubt hiking. It was probably someone was like, oh, why don't we cut today? And everyone's like, let's consensus cut in September. He says we're starting to see the lags start showing up, the lagging effects of higher rates on the economy start showing up. He says that the labor market has seen a normalization. Was asked about the SOM rule. We actually specifically thought that he would get asked about it. We wrote this on our Fed Bingo. Someone asked about the SOM rule trigger. Literally got asked about it. But I'll tell you, look at how I lost Bingo here. I had 2 chances at Bingo. I had a shot at Bingo across the board right here on the 2nd row. This was a shot at Bingo, and this was a shot at Bingo. But I literally lost Bingo in 2 ways because Nick T did not sit next to the New York Times Blondie. I'm like, what the hell? Like, seriously, he always sits next to Jenna from the New York Times. This is the first time in years Nick T had a different woman between him and her. What is this? This is crazy. Anyway, so that was a little bit of a disappointment because I would have had double bingo. But anyway, Jerome Powell suggests this situation is unique. No decision made yet on whether we'll do a 25 BP cut or 50, that we are consensus driven. As soon as the next meeting, he was asked, would you consider cutting as soon as the next meeting? Is there a growing consensus? And he said, yes, there is a growing consensus. The time is rapidly approaching to cut, as long as the data doesn't show a sharp weakening. So, in my opinion now, here's how trades get played. And this is tough, okay? This is tough to play. So I want to make this crystal clear. So we're going to set this up on screen here. This is my take for the trades, okay? So last week, we said whatever earnings are, they drive the market this week. Fed will introduce vol, but that's it. Maybe short-term trade, but earnings will prevail. So, what are we seeing? Well, we saw markets rally after AMD and Microsoft yesterday. What do we expect today? Markets right now are trading down going into the close. Why? My opinion, markets are waiting for QCOM, Meta, and ARM. And then tomorrow, we get Apple and Amazon tomorrow. So in other words, true bullishness may not fully unlock until we clear all of these earnings. So a lot of people are saying, Kevin, in your opinion, not financial advice, when is it time to buy the dip? When dip buy? I think there's an argument to say you dip buy potentially each of the good earnings, right? Maybe each good earnings set. So a little today, based on AMD MSFT. A little tomorrow, based on ARM, QCOM, Meta today, if the earnings are good. And then a little Thursday / Friday, based on Apple, Amazon, if the earnings are good, right? Now, remember what I've said since last week. I said, if earnings bad, recession. If earnings good, flip bullish, right? And then I also said, Fed will just add fuel to the fire of whatever earnings are. I maintain this belief. Now, so far, we are trending in the bullish direction. So I think the markets, as long as we continue to get good earnings, will trend bullish in through the week. Everything. IWM, the Qs, chips, interest rate sensitives. I don't really care what it is. I think it all goes up into Friday as long as ARM, QCOM, Meta, Amazon, and Apple don't get reamed. If they get reamed, you got big problems. So that's my take. So that's why I think if you're looking for sort of longer term dip buys, maybe every time you get good earnings, you dip buy. Another option is, other option, wait until earnings are done. And then another thing you could do if you want less volatility. So for less vol in a trading portfolio, I'd probably go at least next Friday, unless you have diamond balls or some like death wish or whatever. Not saying I don't. I do crazy things sometimes. But anyway, probably a good idea because there will be volatility. And really that volatility is going to be based off of earnings. Now, markets were really tenuous going into the Fed meeting today. I think that's because markets are like, what if we get rugged? What if we get rugged? Didn't expect a rug, didn't get rugged, but I also didn't expect them to tee up the September rate cut the way they did. And frankly, they fully gave us an all clear for a Fed rate cut in September. So now I'm going to take a brief look just to see at where yields sit right now and the odds of a September rate cut. September rate cut odds just jumped. We're now at 1.16 after the FOMC, or at the beginning of J-Powell talking, we were only at about 1.04 rate cuts. That's now jumped to 1.16. We're now at almost pricing in 2 full rate cuts by November, and almost pricing in 3 full by December, and then 3.5 for January. So we'll see where markets go, but I think there's going to be a lot of tenuousness on these earnings. If we could get these earnings out of the way, finally, we could have the all clear, and we could get rid of all hedges. It's my take. Still got some hedges, and as we continue to get good earnings, I'm going to roll off those hedges. So let's see what happens. Anyway, if you want to know exactly what I'm doing, make sure you're part of this Stocks and Psych group linked down below. Can't guarantee you'll make money, but always guarantee to provide you the best perspective that I possibly can give. And folks, today is coupon expiration day. That does mean the price goes up at the end of the day today, 11:59 p.m. today. You got questions, email us at staff@meetkevin.com. Jeffrey Goodlock says, a lot of room for the Fed to cut short-term rates in an interview on CNBC. Yeah, okay. Oh, yeah, he's yapping right now on CNBC. Anyway, we're going to be jumping over to the market, closing live stream for Meta earnings within about 30 minutes. We'll see you all soon. Thank you so very much for being here, and we'll see you. Goodbye, and good luck.
These things that you told us here, I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than Househack, nor am I presently acting as a market maker. Make sure if you're considering investing in Househack to always read the PPM at househack.com.